And a budget is basically a statement of income and expenditure for a school calendar year and a one financial year. So you look at all the departments, all sections of the school in terms of how much income can be generated vis-a-vis how many expenditures are used. And it follows steps like you need to prepare the budget by highlighting all the incomes that you can generate and then the expenses that are going to be incurred, and then you do the planning there. Then once you have done the planning, the budgeting, which is actually a plan, the next stage in financing is now accounting, is now financial accounting. How do you account for the finances that you have obtained? Now, the financial accounting, here we are looking at the various books of accounts that are available in a school, and here you need to follow keenly. Although you have your bazaar or an accountant or an account clerk, then you need to at least understand some of those financial transactions, because you are actually the one in charge. So you need to understand all the receipt books, the cash books, the ledgers, all the journals, as well as other documents like the balance sheet, the trial balance, the payment vouchers, inventory, stores ledger, like that, vote books. Then with all the accounting done, you will also need to do what we call audit. And audit is just an investigation of financial records of an organization in order to ascertain their objectivity and accuracy. So here, you have done budget, you are now spending the amount that has been allocated, and then you need again to continuously monitor how finances are being utilized, so that you don't, as a principal, you don't give your head of department, say 40,000 to go and buy sports kits, and then the guy just goes buy some fake things, like maybe a shoe that was quoted at 2,000, he bought it at 500, and then brings those equipment to you, and then you have said he has spent. You need to monitor how this spending through auditing, continuous auditing. So you can either do it through the board of management or through an internal auditor, or through an internal auditor. Now, those are just financial administration, how to administer school finances. Now, our key task today is about how do we look for these finances, because you remember earlier we mentioned that there are quite a number of challenges that are related to schools' finances. Right now, if you go to many of our schools, they will give you a myriad of problems that they are facing, and all of them are directed through finances. So where do we get sources of funding for our education institution? Now, they are broadly categorized into two. We have public sources and private sources. Now, when we talk of public sources, the main source of education finance is actually the government budget. Every year, the government allocates, actually the biggest chunk of its fund is allocated to the Ministry of Education to run its affairs. It could be in terms of remuneration of teachers. It could be in terms of putting up new facilities, schools, purchase of materials, laboratories, equipment, and so on. So this is allocated through the national budget and then directed to the Ministry of Education. Then we also have the payroll taxes. This one are not common in Kenya, but some Latin American countries normally have what they call payroll taxes, where every company that recruits graduates is supposed to pay a certain percent that goes to fund education. But in Kenya, we have what we call the industrial training levy. This one is charged to all industries that are recruiting graduates. They are charged a certain commission. There's not a commission, but a certain levy, and this levy is used to supplement education budget. So basically, those are the major sources of public finance. So we are talking of the national budget that is devoted to the Ministry of Education. It is the same funding that goes towards funding free primary education, subsidized secondary education, school infrastructure programs, materials and equipment, and also the various capitations that are done to students. Like we know at primary, they normally dedicate around 1,420. At secondary or at junior secondary is around 15,000. At senior, they allocate around 22,240. At university or for the TVET, they allocate around 28,000. While university, they allocate around 130,000 per student. Then, other than the public sources, we also have the private sources. Now, these private sources have been categorized as shown there. Private source number one is direct financing. Direct financing, after the Kamunge report of 1988 thereabout, there was that element that was brought in called the cost sharing. Now, cost sharing was a way that because education is not entirely a public good, it is also a shared responsibility by the private or the individuals and their families. Then family must also take part of the responsibility. Now, through that, they introduced what they called user charges. You are charged for everything that you use. And one of these was called the fees, the introduction of the fees policy, where every student was required to pay a certain amount of money, which they refer to as a fees. So you pay fees, and this fees is used to supplement the education budgets. So one source of direct financing is the fees or any other charges that you pay. In fact, the best term will be user charge. You come to one university, and because you want to access the library, they charge you some amount for library access, which is going to be used to put up more books. You want to use electricity, water, they charge you a certain percentage of amount for the water bills and the electricity. You want to use laboratory, you pay some lab fees. You want to be an affiliated member of the student council, you pay the student council fee. All these are actually what we call the direct financing. All this money is used to supplement the various vote heads that I've mentioned, and quite a number of them in addition. Then we also have indirect financing. Indirect financing, as a school head, sometimes you realize that you are in a place where your school is in a community where members of that community cannot afford cash to pay fees and so on. And because there was a bumper harvest, for example, during that cycle, there was good rain and there was enough maize. So you can decide to do some kind of a barter trade. That mzazi, if a parent has a child in your school and he cannot be able to pay fees, but at home he has a lot of grains. It could be beans, it could be maize, and you know it is going to be used in the school. Then you can do barter. You say your fees is 20,000. Now, each bag of maize is equated to, let's say, 5,000. Please bring 4 bags of maize, and then we will be able to phosphate the fees, the tuition fees for your student for that term, or that term, or maybe the whole year, depending with how much was charged. So that is indirect financing. Sometimes even parents have been called to come and do general cleaning. Like maybe you can do some kind of manual labor. It could be cleaning the compound, and then you, instead of you being paid, it is exchanged in form of some kind of, instead of you being paid, we say that amount is going to be used to cater for the cost of your tuition fees and so on. This one does not end there. It is not just for the poor. In fact, there are countries, even Western countries, where library are not the library attendants are not actually workers. They are just students who are in terms of a program. The librarian, who is an employee, will just draw a program